All right, so let's talk about another perhaps alternative asset that has become way more traditional these days. And that is the kind of gold and silver, the precious metal type trade. We're also seeing some sharper gains as of late in things like gold, silver, platinum, hitting highs over the course of the last couple of weeks as well. And maybe, Jan, I'll turn to you for this one first. When it comes to the gold and silver trade, you run funds that are tied to the companies that actually have to engage in these types of mining activities. Have you seen the type of investor demand out there for some of these gold and first and second derivative plays on gold and silver that are going to have some staying power over the course of the next several quarters and years, despite the fact that we just hit record high, record high, record high?
The short answer is no. I think we're very early innings in this trade, and I'll tell you why. So we started pounding the table in 2023 on Bitcoin and gold. That was a long time ago and much lower prices. But even this year, well, last year, you saw outflows out of gold bullion ETFs in the United States. And what we've seen with our gold mining ETFs this year is outflows. Now so that to me isn't money leaving the trade and taking profits. It's rather people that were short those ETFs covering their trades. And so the banks have to take money out. It's kind of a technical issue. But we haven't seen a lot of money coming in. And when we do investor polls and client meetings, they barely know that gold has hit all-time highs. So I think a lot of this investor demand has come internationally from foreign central banks, people that are nervous, frankly, about the Trump tariff policy. That's been a big boon to gold. But I think in terms of Americans wanting this in their portfolios, really the risk they would be hedging is our big deficit issues and debt issues, which we haven't talked about yet today. But I think that demand is yet to come. So I think, and it's relatively well behaved. So I think we got a long ways to go.
John, that's a great point here, because we've been talking about, we've seen stories even in mainstream news about the fact that Costco has at one point run out of selling physical gold for many of those investors out there. How do you feel about the idea that the fiscal issues, this kind of safety trade idea against our deficits, against this idea that maybe our country is not as stable as it once was, financially speaking, balance sheet wise, is that a long-term reason why some traders and investors want to be allocated on a percentage basis to precious metals like gold, silver, and platinum?
Yeah, sure. I mean, we like to think of gold as the original alternative asset, and it's obviously been a store of value and wealth for millennia. So it is time tested and proven. And, to us, and we obviously manage tens of billions of dollars of precious metals. Last year was a real unusual year where gold went up over 25%, and we're already at that mark year to date. So what is the signal that gold is flashing going up, well below long-term trend? And it's exactly what you mentioned. People are starting to reallocate to gold, but it is still a very small number of the population. What we've seen the last 3 years is central banks being big buyers of physical gold. This is part of a de-dollarization strategy that China is really driving. This is about diversifying away some of the FX risks in their portfolio and reducing exposure to US dollars and treasuries. The other phenomena that's happening this year that I think investors need to take note of is gold is up about 26% for the year, yet US treasuries are kind of meandering around, and that's not really providing the same safe haven experience or behavior that treasuries and the US dollar have traditionally played during previous periods of uncertainty or risk. And so you have the US dollar down 9%, the DXY index, which is very unusual and in a financial calamity, because usually King Dollar kind of reigns. But this is part of a larger concern that's growing globally around, obviously, tariffs, trade wars, and deteriorating global relationships. And so whether you're trying to, hedge interest rate risk, default risk, currency risk, equity risk, gold has proven itself to be very effective. And at Sprott, our Sprott Physical Gold Trust, we've seen well over $1 billion of net inflows. So while investors are not allocating to the equities yet in the mining sector to the same degree, we are definitely getting flows in the physical side. And more recently, our silver trust has also brought in about $500 million. So we're starting to see investors gravitating, as you said, to silver and more recently platinum, as gold has become very expensive you're seeing some rotation and substitution by investors that are looking for better value in those two white metals.
Got to bring up digital gold. Come on, little Bitcoin, right? So we have a Bitcoin ETF, HODL. Interesting factoid for you. So about another money manager did a study. 37 million Americans own exposure to gold. 37 million. Guess how many own exposure to Bitcoin?
It's got to be a fraction.
No, 50.
No,
yes,
even more.
50 million Americans through their research, and which I thought that makes a lot of sense to me, because I think people look at both as a store of value, and over the last couple of years, a lot of the hot money, because of the appreciation, has gone into Bitcoin. I do also think, though, getting back to my prior theory, gold will have more of its day, right? So that's why I think we're still early, and we're seeing inflows into our gold bullion fund as well. But I think Bitcoin is right near all-time highs. I'm not sure where it is today.
It's about 109, 110,000 right now as things stand right now. All right, so we've covered a lot of ground, from alternatives on the private side of things to gold and silver to uranium and everything else. That does it for this week's ETF Edge. Thank you so much to both Jan and John for their time here today. Now, we've asked John to stick around for the ETF Edge podcast. Remember, you can watch and listen to all of our weekly installments over at etfedge.cnbc.com. Thanks for joining us. We'll see you next week on ETF Edge.